Hello, my name is Jason Bowman, and I'd like to welcome you to this exciting new video series where we take an inside look at the Internal Revenue Manual. On Inside the IRM today, we are going to be taking a look at Part 5 of the IRM, the Collection Field Function. Now, before I get started, because this is the inaugural edition of Inside the IRM, I want to tell you a little bit about what we're going to be doing. The entire purpose of this new video series is to tear apart the Internal Revenue Manual, which is the guidebook, it is the playbook, the systems and checklists that the IRS is required to use for doing their job. The IRM is a fairly exhaustive manual. It is freely available to the public on the internet. All you got to do is do a web search for Internal Revenue Manual and the section that you're trying to find, and it'll take you right to the appropriate section. The IRM contains a lot of internal procedures. These are procedures that the IRS is required to follow. So as a tax practitioner, as a tax professional, these are the procedures that you need to be aware of that the IRS will follow when working with your clients. What we're going to do is we're going to step through the IRM. I'm going to go through important sections that relate to representation situations and factors. We're not going to go through every single paragraph of every single section of every single chapter of every single part of the IRM. That's not what we're going to be doing. What I want you to be able to glean from all of this is a working knowledge of the IRS procedures, because this is really going to help you with your clients. Now, I want to state that these recordings are aimed entirely at licensed tax professionals, so I'm talking enrolled agents, CPAs, and tax attorneys that represent clients on particular tax issues. However, this information is also valuable for individuals that have a particular tax problem that is related to the content of that day's video. Now, what I'm going to try to do is one of these videos every business day. Some will be shorter than others. Some will be longer than others. Some of them will be downright excruciatingly painful. For example, I think today's might end up being that way. And the reason is because a lot of the stuff that we're going to be going through are some of the nitpicky little things that the IRS is required to do. No, required to do, not necessarily always do. One of the things that I want to pass on to you, based on my several years of collections representation experience as an enrolled agent, is some of the more common areas where revenue officers and settlement officers, they miss things. And when they miss things, it is your responsibility. You have, I believe you have a responsibility to your clients to make sure that they are exercising the rights that they have as a taxpayer here in the United States, and that they are being treated properly by the IRS, and that they are being afforded all the opportunities that they are legally entitled to resolve a tax situation. And because of, and I don't want to go off on a political rant here, but you know, never forget the government works for us, not the other way around. We are citizens, and the government is there to do our bidding. We are not here to be pawns of the government. And so because of that, I believe that the government is accountable to us. Every government agency is accountable to us. You know, we are their customers, but we are also their boss. And so as tax practitioners, I believe that we also have a duty to keep the IRS on their toes, to make sure that they are accountable to their customers, and that if they're doing something that is outside the scope of the law and regulation, then I think we have a responsibility to call them on it. And so that is what I want to pass on in these videos, is go through some of those responsibilities that the IRS has, and give you, the practitioner, or if you're not a practitioner and you are a taxpayer that is watching these videos, then give you the little gotchas that foul up the IRS sometimes, and the more common areas where they forget to follow their own procedures because they don't refer to these procedures. Now, also as a practitioner, there's something else that I want you to pick up from the Internal Revenue Manual. And this is very important. What I want you to get is how the IRM is laid out. Because the IRM is a set of checklists and procedures for doing every conceivable action within the IRS, what it also presents from a small business perspective, from a practice management perspective, is a really, really good example of what your internal practice management systems should look like. I would encourage you to develop checklists and procedures that are as detailed as the IRM for running your tax practice. It'll run much more efficiently, smoothly. You'll never have question about what needs to be done, when, where, and why, and how, if it's all done by a business manual. So keep that in mind as well throughout this video series. You'll get a lot of insight into how those kind of procedures should be set up, because the IRS is actually one of the more well-organized government agencies. I've done extensive work in my career with other agencies, including the Department of Labor, the Environmental Protection Agency, OSHA, Occupational Safety and Health Administration, and you would be amazed that these agencies, especially those ones that are science-based, like OSHA and the EPA, or the Nuclear Regulatory Commission, and some of these other science-based agencies, it is actually downright appalling how little they have in terms of documented procedures of how they're supposed to do things, especially in their field functions, since that's where I've interacted with them. Even the U.S. Nuclear Regulatory Commission is not, in my opinion, they're one of the better ones, but even they are not as organized and with it in terms of systemization and procedures and checklists as the nuclear Navy is. I came from the United States Navy as a nuclear operator, and so that heavily shaped my thinking as an adult. And because the U.S. Navy nuclear power program runs separately from, they're not under the guise of the NRC, because there's this outfit called Naval Reactors that fulfills that same administrative and regulatory function for the Naval Nuclear Power Program that the NRC serves for the civilian commercial nuclear power field. And even though there's individuals that throughout their careers they cross over back and forth between the two agencies, because it's really the only two career tracks for public administration within the nuclear industry in the United States, is you got the NRC and you've got Naval Reactors. But even for people that cross over back and forth, you would think that there'd be much greater use of the systemization and procedural elements that we learn in the military side, but in my experience, there's some level of it at the NRC, but significantly less than I expect, given my own experience. So the IRS, just from a business operation perspective, actually does an extremely good job compared to other government agencies that I've worked with in terms of systemizing their processes and trying to operate as efficiently as a gigantic bureaucratic organization can do. All right, so that's the end of that rant. Let's go right into the next section here, and I'm literally just going to go through this here in my web browser, so I hope you can see this well. We are in part 5 of the IRM, Chapter 1, Field Collection Procedures. The real takeaway here that I want you to have is that these are the rules governing kind of the big picture interaction of revenue officers with the taxpayer public. We are not going to go through every single section. I'd be sitting here for hours if I did that. And my goal is to keep this to well under an hour, hopefully even 30 minutes or so, so I can squeeze it up onto YouTube. But keep in mind, these are the procedures that we should start with when it comes to how a revenue officer is supposed to treat you or your client. These guidelines are exactly that. They're guidelines. There are some hard and fast rules about what the IRS is supposed to do, and we'll get into that. But this is where you should start if you have any question about how a revenue officer is treating your client. And the reason that's important is because some revenue officers, I don't know if it's a power trip or what exactly it is, but every once in a while, it's definitely the exception rather than the rule, fortunately, despite the image that the public has of the IRS. But every once in a while, you will have a revenue officer that simply oversteps their bounds. They will make blatant violations of their own procedures, which really translate to a violation of your client's rights as a taxpayer and your rights as a representative. And so, like I said earlier, I think we have a duty to call them out on this. So I think it's good to know what some of those bounds are, what the procedures are that they're required to follow. Now, we are not going to ever cover any of the procedures listed in the IRM that discuss the specific computer data entry type stuff that the IRS is supposed to do, unless it's applicable to like a status change to get your client protection or something like that. Then I'll discuss it. But the IRM contains a lot of procedures about how a revenue officer or a settlement officer or an OIC offer examiner is supposed to enter items into the IRS databases. So I'm not going to cover those. I'm not going to cover, for example, in this section, there's a section of Chapter 5.1 here that discusses how a revenue officer that is temporarily assigned to a post of duty at a taxpayer assistance center is supposed to handle walk-up customers and things like that. We're not going to cover that. So let's jump right in here. Guidelines for working collections cases, section 5.1.1.1. Whenever you're looking at the IRM and you see a date here in parentheses, this 10/12/2010, that is the date of the last revision of this section. So this was last updated 2 years ago. It's probably not a section that they need to update very often. But let's go ahead and take a look here. Collections cases involve a variety of unique and challenging situations. So this is the letter to the revenue officer from IRS management. Revenue officers in the small business and self-employed collection field function meet face-to-face with individuals and businesses to help them resolve tax issues. ROs investigate the unique facts of each case in order to apply the right treatment to resolve the taxpayer situation, including appropriate enforcement action when necessary. I want to point out they are specifically tasked with looking at the unique factors in each taxpayer's situation. A revenue officer is not supposed to apply a blanket approach to every tax case. They are tasked. It is part of their job to look at the unique factors in each situation. Now, the appeals function has an even greater responsibility and task to examine the unique factors in a taxpayer's situation. But I think it's important for you to know and for your clients to know that the revenue officer has a duty. It is outlined in their job description. They have a duty to take into consideration the unique circumstances of each taxpayer's case. And they are supposed to work with you to apply the proper treatment to resolve the taxpayer's situation. It's right here in section 5.1.1, paragraph 1, sentence 2, or sentence 3. It's right there in plain ink. And I have had plenty of situations where I've had to remind revenue officers of this like big picture directive. When you get down into some of the nitty-gritty analysis of a case, sometimes you get so buried in the details, the little financial details, the little procedural elements of offers and compromise or installment agreements, and it's a good idea to say, look, we need to take a step back and really look at the big picture. This taxpayer has a unique situation, and we have a duty to apply the right IRM procedures, the right regulations to the situation to resolve the taxpayer's situation. Yes, with the best interests of the government, so that the government gets paid in mind, because remember, these are collections people, but also without creating undue economic hardship upon the taxpayer. The Treasury Department has a directive from Congress to not create undue economic hardship. And that is not something that's in the IRM. That is not something that's in regulation or revenue procedure. That is something that is in legislation. That is part of the U.S. Code. So that has the power of law. Okay, and law always trumps IRM, revenue procedure, etc. There's a order of precedent to that. So the IRS, has a legislative mandate from Congress to not cause undue economic hardship upon a taxpayer. Now, there's a specific Treasury definition of undue economic hardship that you're probably already aware of, and so we need to, fit the facts of the taxpayer's situation into that definition. But don't forget, sometimes you may have to call a revenue officer out on the fact that they have a duty to consider and investigate the unique facts of each case. Next thing here, the IRM provides procedural guidance and instructions relating to collections cases, including balance due accounts. This is where the industry jargon "bal due" comes from. It's actually an account flag within the IRS computer systems. It'll say bal due actually in the database. DELRETs, delinquent return accounts, if a taxpayer has unfiled tax returns. And then other investigations, courtesy investigations. OIs are investigations prompted at the request of other agencies. For example, if the Department of Justice believes that there is a tax avoidance scheme going on that they're investigating, then they may request the assistance of the collection field function to investigate that potential tax scheme abuse, just as an example. Other things that this section of the IRM covers that are really important has to do with their customer service responsibilities to you and your clients. And also the procedures for actually working cases, interacting with you and your client, and coordination between the business operating divisions. So coordination between the collection field function, SBSE, as well as the offer and compromise units, both the smaller field units and also the larger Internal Revenue Center units, and the other functions such as, for example, technical services that handles lien issues, or like I said, appeals, or the OIC units. So there's rules that come into play, and for talking about coordination from between revenue officers, which is the first point of contact for most taxpayers in the collections process, and other units of the IRS. So working collection cases. The purpose of collections, remember, is to collect taxes, collect returns, and I want to point out again, through fair and equitable application of tax law to provide much of the revenue necessary for the operation of the government of the United States. So fair and equitable application of tax law. So revenue officers should not take a excessively burdensome stance when working with you. They shouldn't take an excessive interest in you and your client's operations. It needs to be fair and equitable treatment under the tax law. Group managers, GMs, these are the folks that revenue officers report directly to. Group managers are a wonderful point of contact. If you ever file a CAP appeal, the Collection Appeal Program request under Form 9423, you will have a conference with a group manager within 3 days. And so it's a good idea to get to know group managers in the territories in which you work with clients. If you work locally, I would actually encourage you to develop a very solid working relationship, not only with the revenue officers assigned to your local IRS office, field office, but the group manager in particular. Revenue officers might get cycled through on one-year duty assignments, especially in rural areas. But a group manager is usually going to stick around for 3 to 5 years. It's a pretty important post as they ascend up the IRS career ladder. And so getting to know your local group manager can be invaluable in the long haul, especially when you have CAP, Collection Appeal Program, issues later on. So in addition to doing employee review of revenue officers, making field and office observations, doing morning meetings and that kind of stuff, and implementing the IRS's internal quality assurance system, the EQRS, they're also responsible for directing a lot of the work that goes on in their office. So they actually assign cases to revenue officers. They will approve or deny installment agreements at the local level. They will route appeals to appeals officers. They do a lot of internal traffic routing. So because of that, having a good working relationship with your revenue officer, not just on one case, but over an extended time period, can actually be quite valuable in working with them to resolve cases. Casework procedures. The IRS has pretty specific casework procedures, many of which are outlined extensively in other sections of the IRM. But notice here that they are specifically directed to follow all of the appropriate IRM procedures for each case in inventory. So the IRM exists, and they're required to follow it. That's important if you ever have a revenue officer that is kind of running amok. If you feel that your client is being unfairly treated or being given excessive attention, or that their rights as a taxpayer are being violated, it is not that difficult to find IRM citations for certain revenue officer actions. And if they are violating that procedure within the IRM, then you not only have that particular procedure that the revenue officer is violating that you can call them out on and speak to the group manager about, but you also have this 5.1.1.2.1 item, paragraph 1, that says, hey, you've got to follow the appropriate IRM procedures. So the procedures exist and they have to follow them. Paragraph 2 here is where our authority as a representative comes into play, and where it says that they must interact directly with a taxpayer's representative or appointee according to the extent of the power of attorney. That is where it comes into play, where they have to talk to us and leave our client alone. Paragraph 3 here has to do with disclosure of information. This is covered by actual law. The Internal Revenue Code citation there, IRC section 6103, has to do with disclosure of returns and taxpayer information. Now let's go through case documents, 5.1.1.2.1.1. The revenue officers are required to document their cases. So they take notes about their conversations with you. They take notes when they visit with you. They're supposed to keep copies of any forms. The actual paper file that the revenue officer maintains, they have certain minimum documentation requirements. So if you get a Form 9297 from a revenue officer requesting bank statements, a complete 433A, etc., even if it's a simple case to resolve, even if they are streamline installment agreement eligible or in-business trust fund express installment agreement eligible, revenue officers have minimum performance requirements that go into play when they go in for their employee reviews. And so if you get a 9297 that doesn't make any sense because it wants certain things, it's so that the revenue officer can pad their file for that particular case. And basically they're just covering their own butts is what they're doing. Even if the revenue officer is entirely agreeable, the group manager is going to sign off on the installment agreement and there's no problem, but you still get this 9297 wanting certain documentation. This is why. So they're required to make copies. They're supposed to even claim the photocopy fees, on their travel vouchers, because they're a field function, remember, so they're going out and making visits. So if they stop by a Kinko's and make copies, they put that on their expense report. They're also supposed to provide a taxpayer with a receipt for documents requested directly from the taxpayer or a representative. They're supposed to make a photocopy of the document, put official received date with a red ink stamp on there, and then fill in the date on the photocopy, and then provide the stamped copy of the document back as a receipt to the taxpayer. Now, a lot of times if we are working cases remotely, which larger firms will do, it's how I operate, we don't get that. And so what I want to, and I always want you to encourage you to always, no matter what documentation a revenue officer is asking for, I think it is a best practice, and this is an item that should be on your new client intake checklist, is always request a 9297 that outlines exactly what the revenue officer wants, and always request some sort of acknowledgement. So if you fax, a lot of times we'll fax this information, obviously keep your fax confirmation sheet, but also ask for written confirmation from the revenue officer that they received the information they requested. A good way to do this is to make a copy of the 9297 and write on there provided, and the date, in kind of the margin of the 9297, and then ask the revenue officer to date and initial that or sign it and send it back, just to confirm that they receive the information that they requested. And so there's always a paper trail. You always want to be able to prove that, yes, you provided the information in a timely manner, because that timing comes into play in certain situations later on, especially with appeals. So because they are supposed to, under this section of the IRM, again, 5.1.1.2.1.1, paragraph 2, they are supposed to provide a receipt for any documentation that they receive from the taxpayer or from a representative. So if we're faxing a bunch of stuff, or if we're FedExing or priority mailing a bunch of stuff, yeah, you've got your FedEx receipt. Yes, you've got your signature confirmation thing from the Postal Service. Yes, you have your fax confirmation page, but also include a copy of the 9297 as an inventory of what's included, and ask them to initial that, date it with the official receive date stamp, and send it back. That way you have proof and acknowledgement from the revenue officer that they received what they were looking for. Now let's go into the next section, case closing letters. Section 5.1.1.2.1.1. Whenever the revenue officer closes out a case, they have, in their computer system, they have letter templates, just like you should have for your for running your practice. They have closure letters. So there's, and you've probably seen these, there's the CNC letter, the status 53, currently not collectible letter, closed for hardship, temporary hardship. There's also a status 12 closure. Status 12, status 53 is currently not collectible. Status 12 is when a module has been closed out for either because the taxpayer paid it, or because there was a credit rolled forward or backward from another tax period that applied to it and paid it off, or there was an adjustment or something. You're working with examination and got something adjusted that wiped out the tax liability for that module for that period. Then there should be a status 12 closure letter that comes with it. This is also the section that stipulates that as the power of attorney, you receive a copy of those letters as well. So if you have a POA on file, that covers that module and that tax period, then you should receive a copy of that closure letter. And when you get those, obviously keep them, scan them into your document management system, and you're not required to keep paper copies of those, but keep a digital copy of it at the very minimum for, personally I say indefinitely, but at least for a few years after closing out a case. You'll get these letter 4222s, notice of case resolution, when a tax liability has been full paid, or there's a credit transfer and adjustment that otherwise takes care of it. And as, again, the power of attorney should get a copy of that letter also. Now, this section right here, 5.1.1.2.1.1.1.1, case closing letter procedures. This is an example of the kind of detailed procedure that I would encourage you to have within your own practice for managing your business. Notice that it says, before closing the module, use the ICS template process, highlight the letter, select the next button, note, select enter data grid button. This is the step-by-step procedure for how a revenue officer should generate the letter. You should have this level of detail for doing things within your practice. This might sound ridiculous or excessively anal retentive, but having this level of documented systems for running your tax practice will make everything more efficient, and it allows your business to run without you. It allows interchangeability of personnel. If you end up having to fire somebody, and that happens to be the person, if they have a drinking problem, they're always coming to work drunk, and so you fire them, but that's the only person that knows how to change the toner and reset the toner full display thing on the copy machine, and that as long as it's there, the copy machine won't operate at all. If you've got one person that knows how to do that and they're always drunk, and so you fire them, what are you going to do now? Then you've got to call tech support for the copier manufacturer. You just waste a lot of time. So if you have any procedure that is commonly done, have it documented. Have a written procedure for how to change the toner out, what combination of buttons to push on the machine, so that you can clear it out. Believe it or not, when I worked at a large national tax resolution firm, by default, I was the in-office IT guy because I'm the one that had a clue. And I spent an inordinate amount of my day, sometimes several hours of my day, dealing with toner issues, dealing with the copy machine, dealing with network login issues. And finally, I reached the point where I said, we're going to document this. And so I created procedures for changing the toner on the printers, changing the drums, resetting the drum wheels, things like that. Just these ridiculous little things that anybody should be able to do by looking at the procedure. So having that level of procedure will save a lot of time and headache, especially if you have personnel turnover. Note that this next section, relevant information. Collection case history should contain only the necessary and relevant information which adds value to the case and supports the conclusion reached. A properly maintained case file protects taxpayer and third-party privacy and minimizes the risk of unnecessary records being inappropriately disclosed. Keep in mind that collections files get passed around from location to location. So if you file an appeal, the case file ends up in appeals. And so there shouldn't be an excessive amount of information in the taxpayer's file that isn't absolutely necessary for working the case. There shouldn't be information about, the taxpayer's dog recently passed away. We can use this as a pain point to bring it up, to start making the taxpayer cry next time we visit them. Something like that obviously should not be in the case history. So revenue officers, however, are also tasked with purging extraneous information from case files. This can be information about other individuals or entities which are not pertinent to the case, IRS transcripts which are too old, copies of records which are not relevant to the final case resolution, etc. So you're not going to see the case file unless you're physically in the office face-to-face with the revenue officer, which could happen. And, if their case file's just, if it's 5 inches thick, then I would encourage you to question that. I was like, what on earth is in that file? It just seems excessive, so make sure that the IRS isn't collecting excessive information about your clients. A lot of that has to do with what you send them, of course. So don't send them stuff that are not really pertinent to the case. These next couple sections are about proper use of business reply envelope, and when to include postage paid envelopes for taxpayers to use. Also covers the fact that the business reply envelopes are not to be used for personal use. Obviously, that's a federal offense to use government prepaid postage for personal use. So if it's not to investigate the tax liability or collect a tax liability, then the revenue officer is not supposed to use that. So if you get a birthday card from a revenue officer using a government prepaid postage envelope, then that is no bueno. Let's talk now about coordination between business operating divisions. It says here, coordination between collections personnel and personnel in other business operating divisions or business units is essential in certain circumstances. When a taxpayer's case is assigned to collection and the same taxpayer's case is also open in another unit, effective open communication is critical for reducing taxpayer burden, providing excellent customer service, and facilitating the appropriate resolution of the case across both units. The next section, 5.1.1.3.1, talks about the benefits of coordination specifically between examination and collection. Basically what this discusses is that there should be a steady flow of information, there should be full disclosure between the two divisions, and the taxpayer shouldn't be bounced back and forth between different people. In reality, if there's a revenue officer assigned to a case and there is also, for example, an examination going on, generally the revenue officer will take point and should be the sole point of contact, and the revenue officer will be the one communicating internally with the other units. So if you have if there's an examination situation, you really shouldn't have to talk to the examination, the revenue agent, which is what the audit folks are called. You shouldn't have to talk to them. If there is a lien subordination process in place, it's really the revenue officer that should be talking to technical services for the most part and acting as liaison between yourself and technical services, formerly called the Technical Advisory Group. So in much the same way as your client expects you to be the point of contact and to take care of the communication and the negotiation and the discussion of what is going on, the revenue officer within the collection field function is also supposed to be the liaison, the communication, the sole point of contact between yourself and other entities within the service. Now, obviously that goes away if it goes to appeals, because then appeals then becomes the sole point of contact. But for the most part, within most of the other operating units of the IRS, you shouldn't actually have to talk to them. And that is what this section talks about. It explains what the revenue officer does, what the revenue agent or other employee does. It discusses the benefits of securing prompt responses and just ensuring open flow of communication. This next section is a detailed RO procedure for actually entering codes and whatnot within computer systems for logging, communication, and coordination between different units. Let's see here. These following procedures, these are all for SBSE coordination procedures, for TEG, for appeals. I do want to touch on this one. Collections refers a lot of cases to appeals, obviously, and in a variety of ways. There's collection due process appeals, there's collection appeal requests, there's trust fund issues, there's penalty abatement issues, there's offer and compromise issues. And because of the client protection from levy action that is granted through most appeals processes, this communication between the revenue officer and appeals is important, because the suspension of collections activity and the tolling of the collection statute expiration date that occurs when there's appeals action going on requires coordination between appeals and the revenue officer. So what I would encourage you to do in particular is to communicate with the revenue officer and verify that the proper computer codes have been entered into the appropriate modules in the IDRS and IMF and BMF systems in order to stop automated levy action. That is the biggest thing that you should get from this entire section of the IRM, is verify with your revenue officer, and then also again verify it with the appeals officer that action has been taken, so that automated so that computers don't kick out a levy against your client. So this talks about all those transaction codes and the different procedures for entering those to make sure that happens. Balance due account interest computations. Most interest calculations that are and penalty calculations by the IRS are done by computers, but there are some situations where the computer doesn't do it. So the revenue officer has a responsibility for performing some balance due account interest computations and penalty computations on their own, and also for verifying that those calculations are correct. So when you are reviewing transcripts, or if you get a CP31 or CP90 in regards to a client that is assessing additional interest and penalties, verify that those calculations are correct. Computers are not infallible, and I believe that you have a fiduciary responsibility to your client to make sure that their balance due account records are accurate, and that no additional interest and penalties beyond what is actually legally required to accrue is actually accruing. And if you find an error, then the revenue officer has an obligation to validate those computations and update them in the computer system. And they do have computer access to do that. So this section of the IRM right here, 5.1.1.4, balance due account interest computations, has to do with the revenue officer responsibility for verifying calculations, and they also have the responsibility for making corrections when the computer calculations are inaccurate. This next section, common restricted interest freeze codes, those are internal procedures. Customer service. Let's talk briefly about this. I believe the majority of the rest of this page has to do with operating the walk-up counter at a taxpayer assistance center when a revenue officer is assigned to those, so we're not going to cover that. But this customer service section, the IRS is dedicated to providing quality service to all taxpayers and representatives. Providing quality service to taxpayers requires the following: advise taxpayers of their rights in each matter, and being sensitive to situations where the taxpayer should be referred to the Taxpayer Advocate Service. Keep in mind that the Taxpayer Advocate Service has recently issued in their own directive regarding what cases they will and will not take. And that directive is to decrease their workload because they're just getting overburdened. However, that doesn't mean that you still don't have access to the Taxpayer Advocacy Service, and that your revenue officer doesn't have a responsibility themselves for directing cases to the local taxpayer advocate when necessary. The IRS has a responsibility, obviously, to collect tax revenue, but they also have the responsibility to treat you fairly, courteously, and without, I call excessive attention. You never want to have excessive attention from the government. But the IRS in particular, if a revenue officer is overstepping their bounds and taking too great of an interest in the case, that is a violation of the taxpayer's rights and is obviously not providing good customer service. So those are issues that can be taken to a group manager. If it's a group manager issue, then take it up to a territory manager or a district manager. I've had multiple situations where I've had to talk to territory managers and district managers about the actions of a revenue officer that were not able to be resolved by a group manager, because the group manager didn't see anything wrong with it, with what their revenue officer was doing, even though it was a direct violation of an internal revenue manual procedure and a violation of taxpayer rights. So, if you have to take it up with a TM or a DM, don't hesitate to escalate issues up the IRS chain of command. Yes, it's a bureaucracy. Yes, it is slow, but they have rules to follow. And they have core mission elements to follow, such as this providing good customer service. And if that's not what your client is getting, then hold the government accountable for their own procedures and their own rules. Just because they wrote the rules doesn't mean they don't have to follow the rules. So the rest of this has to do with we're talking, what do revenue have to do when they report to work at a taxpayer assistance center, how to handle walk-up customers, and what they can do within the integrated data retrieval system, the IDRS, which is the large mainframe IRS computer database system. So this is all about how they interact with the IDRS. There are procedures detailing when to close out a case, when to update cases, what notes to leave in the case file notes in IDRS, and what they can't do. For example, do not initiate any access on the records of your spouse, your parents, anyone in your household, your relatives, celebrities, etc. So, there are abuse possibilities, because the IDRS is it's an extensive collection of information, of very personal, private information about individual taxpayers. So there's a lot of potential for abuse of that system, and so these procedures are obviously in place to help prevent that. Last thing I want to touch on in this section is taxpayer identification number issues. Taxpayer ID number, either a social security number, a alien registration number, a employer identification number, preparer ID numbers, adoption numbers. So whether it's a SSN, EIN, ITIN, ATIN, or PTIN, the number within IDRS, it's very, very, very important that you make sure that the information that is assigned to your client, so all these IDRS record entries that the revenue officers are making, and the computers make, and that the tax return processors make, you got to make sure that all of that is under the right taxpayer identification number. Particularly when you're dealing with taxpayer identification numbers that either are created later in life, or that can change, like an EIN for a business can change if there's been a change in the business that warrants it. Or if you have somebody that came to the United States and obtained an alien registration number, they're now called, ITIN, the individual tax ID number, because they don't have a social security number, that ITIN is created later in life. And so there is potential for that number to have been miskeyed somewhere. So make sure that the information that the IRS has on file for your client is actually for your client and not for somebody else. I have had cases, particularly with ITINs and EINs, where the IRS mixed up a number and put the wrong information in the wrong person's or business's IRS records, or a business files a 941 and they transpose 2 digits of their EIN when they submit the 941 return, and so then it shows them as under their EIN that they never actually filed. These kind of issues are actually more commonplace than you would imagine, because they're all subject to human error. When you file a tax return, you need to be careful, obviously, to put the right TIN in there. If a taxpayer has been filing their own 941s or 1040s or any other return, go through the history of those records and just double check, make sure that they put the right taxpayer ID number on there, and then also make sure that when you're looking at account transcripts and whatnot, make sure that they're actually for your client. If you're looking at a 941 account transcript, for example, and you see, that for first quarter of 2008, that the on the line where it says, return filed by taxpayer with balance due $4,231, but you've got a copy of that return in your hand, and it shows a bottom line of $208. Well, there's a disconnect there. That's a $4,000 difference between what's on the account transcript and what's on the tax return, and so that $4,000, when you tack on penalties and interest from 2008, they're all of a sudden looking at a $7,000 or $8,000 tax liability when the original tax return was only filed for $200. So what happened there? Did it get keyed in at the IRS under the wrong EIN? Was the return filed with the wrong EIN? Be sure to be careful about those issues. So these additional sections of the IRM refer to the procedures for undoing transpositions of TINs and entering of information under the wrong TIN. That's what all these procedures are about. So refer to IRM section 5.1.1.7 if you think that there's been an issue with a tax ID number for one of your clients. So this talks about cross-referencing of sole props, SSN, EIN, invalid social security numbers, making sure SSNs get in on the BMF, and some other issues and corrective actions. So refer to this yourself if you encounter one of those issues, or if you're talking to a revenue officer that doesn't know what to do about that kind of an issue, then refer them to IRM section 5.1.1.7, and that's where they can find that procedure. Well, this has definitely gone a lot longer than I anticipated that it would, but I hope that the information that I've shared in this first Inside the IRM video have been helpful. My name is Jason Bowman. Please be sure to visit taxmarketinghq.com for additional collections representation information, including technical training, as well as practice management, best practices, systems, checklists, all those kind of goodies are there. And then, of course, my favorite part of what I do is helping folks with their marketing. If you are not experiencing the number of leads coming through your business that you would like, or you're not closing as many new cases as you would like, and getting as many clients as you'd like, then you and I should talk. So please visit taxmarketinghq.com for more information on those resources.